and then let. Everyone, do you have more execs? Yep. Okay, Ruby.
So we're calling this April 3rd meeting of the COIC Executive Committee together. And I think this is an executive session, right?
So we're gonna start off first with just the regular agenda, and then we'll go into executive session
Okay.
here in a minute.
So I was not at the last meeting, so I'm not sure about the minutes, but I want you all, so have you viewed them? And
I'll move the minutes.
And I'll second.
Okay, first and seconded. Any discussion or corrections anybody has? All those in favor?
That's fine.
I'm gonna abstain, go there.
I'm sorry, what was the first and the second on that?
Third time.
Second.
Thank you.
Agenda review, everybody should have the agenda for the meeting in front of them. I know there was a little bit of at least confusion from my end around some of the relationship of the items, but that'll get clarified as we go through the creative sector stuff and the large lot industry program. Anybody else have any other comments on the agenda you want to say about it?
I'm gonna wanna roll right about 7 o'clock, get over the rodeo. I got people waiting for me.
Yeah,
Yeah, I got the hat in the car too.
perfect, okay. And you know what, tonight we might end up just being fine,
Yeah,
so.
so I'm just saying, I'll be.
Yeah.
I'm sorry, but I don't know that we can excuse you.
Yeah.
Maybe have to have a vote.
Unless we
Steph
get
and
free
I,
tickets.
Steph and I are voting no.
Oh, my
Just so you
goodness.
know that.
Or just charge the shoot fall, you know.
Yeah, there you go.
Yeah, or can we make a motion against
First
the
big
shoots
rodeo
here
of
or
the year.
something?
Yes. I do want to call to your attention that at last month's meeting, we did end 30 minutes early. Not to put any pressure, but I
Yeah,
just
yeah,
want
yeah,
to
okay.
call to your attention that the vice chair did an excellent
I've heard
job.
2 meetings, now, where they were short as ever, and I wasn't there.
Yeah, oh.
Okay, that's- yeah.
Trend.
Yep.
Okay. All right, well, if nothing else, then I think we'll go into executive session.
Well, so real quick, on the financial reports, in fact, yeah, I can, there'll be some items maybe to talk about. I just want to bring them up here so we don't. Loans, like the ARPA loans, there's some, loans that are, it's kind of generic in the financials. That, just wondered kind of the status of. There's not a lot of detail, it just says there's an outstanding, or COVID, it says COVID-19 emergency loan, so I'm looking for.
You know, okay.
Page 9 in the packet, or page
Yeah.
15, or 9 or 17. 9.
So just, yeah, just the status of who and what is kind of my thought, so that, I don't know how deep we want to go in it, so that would just be my question. COVID-19 emergency loans, Deschutes County and Jefferson County, well, I guess there's only Deschutes County balances. But it says beginning balance 11,000, principal repayment 7, ending balance 7. Is, you know, the question is that a bunch of companies or what's the status?
Yeah,
So it's just getting into it a little.
That'll be a bunch of companies. I can provide the board details. I don't have all those companies memorized.
Yeah, not a problem. As I said, I think it was in here twice. It says attachment B, page 21 is what. Just to know more. You know, because my thought is there a way to write those off? And I'm not saying we should, but I just like, you know, if we look at them. Because I've met a few business owners who are like, well, yeah, we took a loan and man, it sucks now because it's, you know, it seems like in the past. I don't know if we have the opportunity for that or not, and you know, what this fund is. So it's really just learning more.
Patrick
And I
will be with
wouldn't-
us this evening
Yeah.
too, so he's a perfect person to ask as well. And so,
The other question that I have in that, so, when you said that, I was looking at page 9, which has got the Deschutes County COVID emergency loans listed on the portfolio, and then we have the second accounting for them here on page 21, and it's the EDA portfolio and then the LJC. Those are different items, correct?
Those are different loan funds,
Okay.
correct?
So yeah, I mean, you know, just getting into it a little bit more, just so we all have a feel for it.
so tonight, that is perfect for tonight because we will be going over our loan program 101.
Yeah.
So after that presentation, any questions that you still have, we will, that means that the presentation that we're giving to the board doesn't have everything that it is that you're looking for. So,
Oh, yeah.
and the reports, these reports are not for us. There are some that we need to have, but these really are for you as well. So if there's something here that we're that you're not seeing in the packet and you want to see, we are here to make that happen.
So it's just interested a little bit more info.
Yeah.
Cause it's great to see companies in there and be able to, pay off their debts and stuff. But yeah, when I saw the COVID-19 ones, I'm like, oh, what's the status? That's all.
That's great. Okay, so we have just a couple minutes. Do you want me to do a quick run through?
Sure.
On the agenda, and the other thing is if we don't get through the agenda, you all will be here for the agenda, so that would be the most pressing thing today is making sure that we have an opportunity to meet with our attorney and go over any questions that you might have in terms of our current bargaining with ATU. So,
Is he joining us? So,
4:45, yeah.
yeah.
Should we ping him early or 2 minutes?
I mean, if you want to go over, I don't know if there's something.
So we will be, so Scott Acock, who I sent a message to all of you, bittersweet. I've known for the last couple of years that he is wanting to do something different. And so he has made that decision and has been accepted the position as our regional solutions coordinator for our region. So we will continue to work with him closely. And his last day is April 25th. And so this will be his last board meeting. So we will be hosting an event for him later in the month, but just as a heads up to all of you that this will be his last board meeting. So I sent a bio, he's been out until this morning, so I sent a bio over to Mike late this afternoon. So hopefully you have, an opportunity to thank him. Because
Well, he's been with the organization for 20-something years.
22, which is just amazing, yeah. Yep. And it's, he's an empty nester, it's the right time, it's really, it provides us an opportunity to look at the department too, and sort of figure out what we need, what's different. So, and it looks like our trustee attorney has joined us as well, and I think for Stephen, it would be, yeah. I would just start by saying that, we are going to need to go into executive session, and so that's on our executive. So we would stop, before we stop the recording, we are going into executive session under ORS 1926602D for labor negotiations. And at that point, we would turn off the recording. And yeah, that's great.
Notes and everything.
Okay, so that concludes, Mr. Chairman, if it's okay.
Yep.
Or to the
And the
executive
executive
session
session.
for labor negotiations.
Yep.
And I'll turn it back over to you.
So do we have other people waiting to come in? Yeah.
We do, and we are just about at 5:30,
Yeah.
so
Should we take 5 minutes, let people get some food? if they need
Lovely.
food, and Get started. Okay.
I think we can.
David Beck, City of Culver, Counselor.
Thanks for being here tonight. Are we gonna do back here to?
Sure.
Sure, staff and guests.
Let's start on this one.
Yeah,
Sure.
Damien's got a mouthful, I think.
Right,
Not quite.
good, thank you. Good evening, everybody. My name is Damian Cernick. I'm a senior long range planner with the City of Bend.
Hi, I'm mouthful Scott Acock, Community Economic Development Director at COIC.
Anna Palat, Human Resources Director, COIC. Erin Sullivan, Senior Human Resources Generalist at COIC.
For a month, 3 weeks,
2 weeks.
2 weeks,
Wow,
okay,
yeah.
amazing, yes.
Michelle Williams, Deputy Director, Fiscal Manager, COIC.
Bob Townsend, Cascades East Transit Director.
Patrick Kermit, CYC Loan Office.
Thanks, everybody. Couple things. We have some new stuff we're doing tonight in terms of recording meetings, so we're still broadcasting generally via Zoom. That's how people can watch the meeting live. And then those meetings are being recorded. And I'm assuming we started the recording, right? I think I heard it go. And then they'll be posted within some kind of time frame. Do you want to talk about that for people to be able to view the meetings in the future?
Yes, so this is our new location. Yay! So I first want to just make sure, because we haven't been here before, I want to make sure for those that are on, so John, this might be you. Can you or anyone else let us know how the audio is? If there are improvements that we can make, and also for Counselor Curtis as well? How does it sound?
Sounds great to me.
Okay, good. And Counselor, you are on mute.
You're right, I was. The volume is fine for me.
Excellent.
Great.
Okay, so going forward, our hope is, of course, this was the plan, is to find a space where it works. We have parking, we have room, all the things. And then we also want to get out into some of the communities throughout the year as well. So this will be our home place unless this is not available to us. But with this, now we feel like we have the right audio, the right space, the right place, and can now start posting videos in a space that people will actually be able to hear the audio and know how things went with the meeting. So those will be posted on our website. We also, at the last meeting, we had a question around some of the materials on the website. We realized that if you went to the website, you ended up with last year's materials first, and you had to scroll down to find the relevant materials. We've cleaned that up as well. And then, as I've been mentioning, we are going to do a complete overhaul of our website. It is not user-friendly. It's there and it's meeting the requirements, but it's not what we would want as our public-facing user-friendly website. So that's on the horizon as well. But just wanted to let you know that you are being, as always, recorded, but also you will be videoed and then captured, as with many of your councils and commissions as well. I do also want to just mention that we, as a council of governments, are meeting the law in terms of what we are posting. So you haven't been out of compliance while we've been working this out. So if you have questions, don't hesitate to reach out.
And then I think our service story person is not here yet. Is that correct?
I am in the process of talking with them.
Okay. Okay.
I don't have an answer.
So I think we'll just skip that agenda item for now and come back and revisit it if they show up. Or do it via Zoom. So we're gonna go to the public comment. Don't think we have anybody here in the room for public comment. So, John, you may be the only one here who might want to make a comment besides members of the board. Did you have a comment tonight?
Yeah, my name is John Halen. I live in the city of Bend. I just wanted to thank you all for dealing with and listening to my incessant whining about recording the meetings and publishing them online. I heard preemptively that you guys were going to be doing this, and I just wanted to say thank you so much for listening, and I can't wait to be able to watch these after the fact. So thank you so much.
Does that mean you're gonna leave us now and not stay with us for the next 2 hours? Yeah.
Never see me again.
No.
We like seeing you though, John, and we always have a meal for you.
I'll see you in the hood, John.
Yeah.
Sounds good.
So I think we'll move on to the consent agenda now. We have a motion to approve the consent.
I move to approve the consent agenda.
I'll second.
Any discussion about the minutes or? any-
So we're just asking about, some little bit of financial detail. We don't need to go deep into it. I mentioned to Patrick already. Page 9 and page 20, I think, talks about COVID-19 emergency loans. And the concept is just, what's the status? How many companies, is the money flowing? Because COVID-19 seems to be a little bit of history, but as small businesses that took out those loans in a critical time. And just kind of want to understand how the payback schedules are flowing. So I don't know that we need to get a specific status on that tonight.
Mr. Chairman, if I
Yeah.
may, so Commissioner, would it be okay if we just add that to his presentation?
Oh, yeah,
for
I
a few minutes?
just mentioned
Sure.
it. Yeah.
Perfect, yeah.
Yeah, you okay with that, Patrick?
Yes.
You talk about that first and then get to your main item. Okay.
Would you like to talk about it now?
No, when you get to your agenda. Any other discussion about the minutes or any other part of the packet? Okay, all those in favor of approving the consent agenda? Aye. Opposed? Okay. So we're gonna move on to the program update, and the first one is you, Patrick.
Welcome.
And you're welcome
At their
to. use the podium. We can see how that works. You are also welcome. That doesn't mean a speech. But also at the same time, you are welcome to sit at the table too. It's whatever works best.
I appreciate the second alternative.
You know what? I'm gonna go over there.
Oh.
You'll get
There we
better
go.
visibility.
We get all of you.
Yeah.
I can hide my notes.
Now you look really official.
Thank you. And thank you, Kimberly, for the slides. I'll give you a little ticket as we go along here. So, thanks for this opportunity to kind of bring everybody up to speed on what's happening with our loan program. I'll take questions at the end, would be super. I'm taking notes for things that are going along. And first off, there was a lot of information was already put in your packet to give you some background of what we're going over. I don't want to go over all those things, but I'll talk a little bit more detail about some of them, and I'll probably leave more time for questions at the end. But basically, this is the stuff I want to go over today. Where we fit, our three loan funds, you know, how we market ourselves out there so people will recognize what we do. You know, what we do, how we utilize our partners, and how we facilitate the process for our clients. I want to go over our application process. I'll go into some more detail on how we qualify and vet our potential borrowers and what they go through, what we go through. I want to talk about our loan committees. I want to talk about how we establish our rates, possibly some changes there. Also on our loan committee too, and you know, where we are, where's the marketplace right now? How are things happening? I'll touch on the C-19 loans and what's on the horizon. And we have a meeting next week to kind of fine tune some things that we'll potentially be bringing to the board in the future. Thank you, Kimberly. So let's talk about non-traditional lending. So I want to start off by saying bankers and community credit unions, they're our friends. Okay, this is very important. We don't compete with them at all. We work together with them. And the way this works for us is pretty much like somebody comes in and connects with us. We're only able to move forward basically if they're not fitting in the traditional bank lending world. And I'll talk about those things in a second here. But that's very important to our business. So there's always this reciprocal relationship where if somebody connects with me and I'm talking to them and they haven't spoken with the bank or their credit union, I'll say, reach out to them. We need to reach out to them. But we'll also talk in real terms on what they're gonna bump into as they reach out to them, what's gonna be important to the banks. And I'll say, we might have an opportunity for this to flow back to us. Sometimes the bankers are connecting with me on that front. And the reason we work together so well, and I've been working in this community for 4 years now, I'm kind of a networking maniac, is that I want the bankers and credit unions to maintain the relationships they have with their clients. So it's a positive handoff. So I want to just indicate that that's how it works. And I do need a denial referral turn down letter from at least one of those to move forward. And the reason we work in non-traditional lending, we're in community economic development. So we're going to look at things a little bit different. We look at things holistically. And for any one of these reasons, a bank or credit union could kick somebody out of the process. It's a new business, less than 2 years financial. They just might not be doing it. It's kind of usually how it works. Outside their lending policy risk metrics. I mean, banks are there to make money. They're there to have profits, consistent income, report to shareholders and everything. So their tolerances for a lot of things we look at are a lot tighter than what we look at in community economic development in our lending. They also are concerned potentially with their portfolio balance. If you said restaurant or retail, you know, the banks are going to struggle with things like that, or they're going to say, hey, we're too much vested in this industry or this particular niche in the marketplace, and our portfolio book is skewed that way, and that means their risk is also higher. So they're always trying to balance things out, and they're changing this all the time in their lending directives. So banks will have issues with revenue sometimes for businesses. We look at things differently. I'll explain that in the next slide. But they have, basically, they want to see great performing clients that don't need money. That's their favorite kind of client. Somebody that doesn't need money, they want to lend it to you. If a company has a hiccup for a year or two, and we saw a lot of this during the pandemic, we were able to help a lot of businesses during the pandemic, which lasted longer than you officially might consider it lasting. We did a loan last year. I'll bring that up in a second. It's still pandemic related. So they're gonna look at those revenue streams and they really want to see it consistent, they want to see it current, and they want to see a good future. Debt service qualifying metric, that's the ability to pay back the loan. They're very strict on those items too. They have just like, you make the number or you don't. Sorry, you didn't, gotta move on. That's kind of how the banks operate. And that's fine because again, for profit, avoiding risk, making sure loans get paid back. They're always looking for 100% paybacks. One of the banks I spoke with that said, Patrick, we've never had a loss in Central Oregon. Well, that's good, but that's bad. So, I mean, at some point we have to figure that out. And I'll explain how COIC fits within that risk matrix. They look at credit. There'll be a little bit differences there, but they have breakpoints where they're score driven. They'll look at, FICO scores or TransUnion or experience scores, and they'll be looking for a certain number to make the grade. If you don't make the grade, we got to move on. Hence, maybe a phone call from me. And I'll explain how we look at that in a second. And collateral. So collateral is basically the assets that back the risk that you're lending to. Banks are pretty firm on wanting to collateralize loans at 100%. COIC also works not just as a direct lender, but also in second position with the bank. So we'll help mitigate their risk by partnering together. And a lot of our portfolio in the past was based on that. So in your packet there, I gave you a little bit of history about, some of our loan programs. And at one time before I got to COIC, we had another, institution under our umbrella called the Oregon Business Development Corp. And it went back into the 90s, and Jim McKinnon, who was with COIC for like 20 years, and there was a team of 3 people at the time, used to package basically SBA loans. So that was kind of a conduit where you're working with a bank, a community bank or credit union, packaging an SBA loan, and then some of our EDA or IRP loans would go on top of those loans. So it's kind of a facilitation process where it was almost kind of like a feeder system for the partnership. It worked out really well. So we look at clients I want to basically say, we look at them in a different way. And it's a very progressive way to understanding their situations, trying to figure out a path, but still be prudent lenders as we're lending government money.
Patrick,
Yes.
question. When you were talking about partnering with banks to mitigate risk, can you explain that just a little bit further?
Thank you. So let's say a 100% of a project cost might be $100,000. Okay. And the bank's looking at a loan package and they're saying, well, we like the project, but we need more equity down from you, more than, let's say, 10%, or maybe we're only willing to lend 50% towards this project cost. $100,000 project, that's $50,000. Borrower might have 10,000 or 10% down. Well, there's a 40% gap in there. 50% bank, 10% borrower, we're still missing 40%. So COIC has stepped up and came in second position. We call it gap lending, and we fill that space in there so the project can get completed and we can get somebody over the finish line. So it's like putting a second on a house, or you go buy a house, you get 80% first, 10% second, 10% down payment. That's one way to look at it. So that's how we work.
So the banks are proactive in reaching out to you then?
So it's something I always work with the banks. I pitch it out there. I'm gonna tell you right now, it is a bit of a problem. And I want to discuss that as we go through this process here. Let me make that note. Well, let's talk about it now, okay? So one of the issues we'll deal with, and I'm going to talk about this in the slides, is our timing. I'll get to talk about our loan committees, our timing, our approval authority, how things take. It has been an obstacle in the past working with banks to some degree, because I gotta just tell you, the way the COI system flows right now, it's a little bit, bogged down. Okay, and I think it prevents some of the borrowers from continuing in the timeline they want to continue in. That's really what the obstacle, the timeline's on. On the other hand, this type of business for us is going to be picking up. Because a little bit of history of where things have been with our program is that there were some loans on the books that were at 6.5%, 7%, 8%, that when rates went down during the pandemic, they all got paid off. I mean, our portfolio just runoff was huge because banks were all in. I mean, they were doing things, they're doing this, they're doing that, high risk, 100%, high level financing. So the demand wasn't there at the time for doing those things. But I can tell you this, it's starting to pick up. I'm getting more calls, more conversations about it. So that's kind of some history about that. And I'll talk about it a little bit.
Yeah, no, thank you.
Okay, so historical financials, important to businesses, COIC lending, and again, I work with a lot of new businesses, referrals or direct, and talk about marketing here, but we will use projected pro forma income statements. And I rely a lot on that when we're looking at loans for new businesses. I mean, there's a lot of other stuff we go through, but we will lean towards those items to make sure that there's enough, at least projected income to service the loan. Banks, we go back to banks and credit unions, they kind of want to see that historically. They want to see it proven. That's just their nature. Our nature is higher risk community economic lending. We're looking for the things, I just want to repeat that's in your packet, but basically we're looking to, create employment, employment expansion. We want to retain jobs during tough times. It's job retention. We want to raise the economic viability of the community. We want to hit impoverished or underserved areas, offer more, loans and ways for businesses to grow there. So that's our purpose. They look at things differently. So debt coverage becomes important for them. Like I said, they want to see not only the loan being paid back on a monthly payment 100%, they also want a cushion 25%. That makes sense to have a cushion because you're going to have an income stream that's going to flow up and down. COIC is more tolerant of that initial debt service, where we can look at, say, okay, we can see that you're making your payment, and we like to see that you're going to hit this cushion, but we're going to give you a little bit of time to do that. We're going to give you a year or 2 years, as long as we can see the pathway to that success. Through the information that we gather, we're able to determine that. These are things that are discussed in the loan committee. That's why we bring loans forward, because we can see that the debt coverage being met. But it's not always historical, is what I would say. Collateralization. So the nature of our business, especially if I'm looking at what's called working capital loans. So we're doing working capital, it's cash to help their business, pay their accounts receivable, give them money to hire somebody. Equipment loans and real estate, but typically the working capital loans, there's not necessarily a lot of collateral there. That's like the back the loan. Becomes much more important when you're dealing with larger loans. On our smaller loans, let's say, a $25,000 loan or less, we're much more tolerant of a collateral shortfall, because if we had to absorb the loss, it's not going to blow up our portfolio. Basically, as we reach for higher loan amounts, collateral becomes very important, and we collateralize what we can. As an example, I will, with the borrower's permission moving forward, but we'll put liens on the second position. Now, it's interesting in a discussion with clients, if let's say they want a $150,000 loan and a lot of it's working capital, and they don't have a lot of assets to back in the business, we'll look at the home ownership. If there's some equity there, say, if we're going to be all 100% in on lending you money, you need to be vested too. Are you willing to put your house up as collateral? Sometimes they say no. Sometimes they can't move forward. Okay. If you're not all in your business, how do you expect a lender or somebody to be on it too? It's kind of the way the process of works. The other thing too is putting a lien on the house keeps everybody up to speed on page that I'm really going to work hard to make sure this thing works. We've never taken back a house. I don't expect us to ever take back a house, but having that extra security there is that, hey, if the loan goes south and they just say, I'm giving up, tough luck, COIC, and 5 years later, they sell their house for a profit, we're still gonna recover our money, minus the interest, but we'll get something back. But collateral becomes important. But we have cars, we have personal cars on our books. that are paid off. I mean, it's interesting. I always try to work with people to see what they can, but the thing is with the collateral, we need vested interest, not just like, I'm gonna be great and make these widgets and it's all gonna sell. Let's be real about it too. So, we're very flexible on that. Banks are very tough. Credit, we look at credit differently. I'm not score driven. I gotta tell you, in my career, I've seen thousands of credit reports. I can look at a credit report like a mortician and say, okay, this is it, this is how it works, no big deal to me. But I can determine or not with the right questions, whether or not somebody's suitable in their character, because we look at these things on the loan, if they have the character to pay back the loan. And things might be on the credit that could ding them, would be a huge medical expense that, devastated their credit, a job loss for a period of time that was, again, a few years ago, but they've reestablished. Those are things that are acceptable in our world. We can see that path moving forward. They reestablish credit. Those are one of the things that's important. We'll lend on businesses that, like I said, the banks in their portfolio balance won't lend on. If you said, a restaurant, retail, a tap room at some point, said brewery right now, it's almost run away. Some of the businesses in the right location, if the borrower has the right experience with the banks in that relationship, some of the banks can move forward, but we're filling a gap out there where the banks can't, and it's really key to helping our community. Thank you, Kimberly. Next one. Okay. 3 funds in your package. I gave you some history of the funds. Let's talk about the differences between these funds and.
Patrick, just really quickly, we didn't have the materials in time to get into the packet. So as you're referring to the packet doesn't have this, but we will send all of this out to the board after your presentation. And so the materials that they would be able to look at tonight would be the materials that are captured in our fiscal or in our financials, which would give you the fiscal overview of the loans that we have.
Okay, so those other pages that I had, were they in the packet?
No.
Okay, yeah. Okay, so you will get a history of our three lending buckets. Okay, EDA, Economic Development Administration. Let's talk about that one briefly. Think of this as our Central Oregon all-encompassing bucket of funds. It's the majority of what we lend from. It has been. There's been a couple disbursements that started back in the 80s. We had a couple of tranches of funds. These were either matched with grants, matched by the counties through COIC, and then grants from the federal government to establish these things. We had actually 3 tranches of those converged into one, and then during the CARES Act, we had a couple $1 million to lend out. It's a completely different program for that one to get money out the door. But there's 2 EDA funds we basically manage right now. The biggest thing about these funds that's important is they'll allow 10% down for existing businesses, new businesses, 20 to 30% down. We keep that range open because I'm looking, if I have somebody that has experience in their business, that understands their business, potentially less money down. New entrant with no idea, but a great business plan, more equity investment. But the real restrictive part I see with this program is there is something called Davis-Bacon prevailing wage law. I'll get calls for tenant improvements on a lot of projects, especially referrals from, let's say, Compass Commercial or some of the other players we work with. I can't move forward because prevailing wage says basically you have to pay union scale to have some drywall put up. In the private sector world, it just doesn't happen. Nobody pays that because think of it as costing you twice as much. It just doesn't make any economic sense for anybody to move forward with that. So that's been a restriction of that program. USDA, United States Department of Agriculture, we manage something called the intermediary revolving loan fund. We borrowed money from the USDA and we re-lend it out. That's the IRP portion of that one. And that money has a lower risk tolerance for it because if we lose the capital, we still have the government money. So that program's typically been focused for real estate projects or equipment projects with good collateral. They require things different. Every government has every program has a different rule book. But if somebody comes to me directly, they have to have a 25% down payment. equity. That's been very restrictive for us, and I turned away multiple clients in rural areas for that reason alone, sadly. But that's the rule book for them. If I'm working in partnership with the banks, they can come in with 10-15% down. Goes back to your question, the banks haven't been doing a lot of that in partnerships in that, recent history here. However, they don't have the prevailing wage. So I can do 10 improvements there. Crazy, but that's how it works. Local Job Creation Fund, LJC, set up by the counties. The small bucket of money for us, just to give you an idea, I've got about 2.75 million over here. The USDA is gonna put me at about, I'm gonna say $500,000 to $600,000. When I say $500,000 to $600,000, when you look at the financials, it'll say 1.1 something million. We owe them money. So when I say $500,000 to $600,000, that's our own money that I could, play with a little bit higher risk tolerances. The Local Job Creation Fund, very small fund, only has about $250,000 in it, but that program, basically, we just go into that with the mindset of prudent underwriting guidelines. I don't have restrictions. If you were like a DACA registered, I couldn't do it under the other two programs. I could do it under LJC. So there's all sorts of flexibility with this program, but it's a very small program. So I have to be focused on how I'm going to utilize that money so I can extend it out. And typically, we look at this fund for micro loans. I'll talk about briefly, but also just our smaller loan amounts. It just makes sense there. 10 improvements, things that are just falling out the other two buckets on guidelines, but still makes sense to move forward. We'll see if we can utilize that fund.
Patrick,
Yes.
before you move on to the next slide, I had a question on the EDA portfolio.
Yeah.
So
Sorry.
when I'm looking at the portfolio kind of summary that was sent over with the financial statement, so specifically on page 9.
Page 9 of the packet.
Yes. If I'm reading this correctly, you've got the total portfolio balance is about 4.2 million. You've got 2.9 sitting in cash reserves. Is that accurate?
It's closer to 2.7 because we the Dansky loan was funded. That was $133,000. There's always like an over gap the way that.
But we're still at more than 50% of the total fund is unlent,
Correct.
correct?
Right.
So
Okay,
we did have a period of time where we had no activity. You might want to. So he did. Okay, sorry.
Yeah,
Okay,
I think,
yeah.
yeah, you should review it.
But that's why we're doing this, is so
yeah.
that the board is apprised of what it is. that we
Okay.
have to
Yeah,
do.
sure. So I'll kind of give you an idea here. So first of all, I'm trying to get money out the door. I want to just, let's start with that. I really want to move.
That's
money
your
out the door.
job, right?
That is
That's
his
my
job.
job and I feel
Yeah.
good about it and we're helping people. We have to do it prudently, okay? That's very important too. So you have to be some guidelines here. But I'll give you an idea. 4 calls in the last 4 days. I get inquiries all the time, okay? I am able maybe to move 1 forward a month. Maybe 1.5 if you looked at it on average, sometimes less than that. There's a period of time during the pandemic, nobody wanted to borrow any money, only the ones that had to, okay? So we definitely go through cycles of demand, but we're always trying to, I won't say push the money, we're trying to make it available to people in any way we can, from that standpoint. I file reports with the Economic Development Administration twice a year on the CARES Act, once a year on our other EDA fund. We were released from some reporting requirements because we handled the regular EDA fund so well. But we kind of grade us on those metrics and other things. The original EDA, we got an A, they just kind of took us off their list, so it's only once a year. And on the CARES Act, since we've only had that a couple of years, we get Bs in our rating, which is still really good, but they look at those metrics. And we talk about those metrics with the home base, and we can talk about it here too, so.
Okay.
Does that help out a little bit?
So what I hear is opportunity.
Opportunities here, we're
Yeah,
always trying to.
I mean, I guess-
Yeah,
Yeah.
My question is, because I'm on the other side of that equation, and yes, we do, so credit unions and banks do participation loans.
Yes.
And they do them with each other as well with COIC, so yes, that's hopefully a growing part.
Yeah,
Kind of as
yeah.
we go forward.
exactly, and I appreciate that. I work with Dan State, Jacob, and Mark all the time for Mid Oregon. I work with Washington Trust, Corey on our loan team, Summit Bank, People Offer Loan Team, Ashley, Ted, Jones, we're always kind of networking these things to help, see where we can help out.
I guess the part of what I was kind of looking at is you kind of talked about like the banks are shy of default. Just by their very nature.
Yeah.
So what is this portfolio's default bank?
Okay, so we did thank you, Jeff, great question. So we did a default analysis, I think it was 2 years ago. And I went back 20 years on our loans, 20 years, crazy long time. Our default rate was, I think it was about 4%, 4 something, right at 4%. So in conversations with a couple of people, one, I communicate with our other economic development districts around the state. Some of them run higher, much higher than that. And speaking with the EDA people out of Seattle office, Patrick, 7 to 10% is what we see a lot. Okay, so in other words, we're low on our default risk, but the question is, if you want to reach into potentially riskier loans by taking in more volume, how do we manage that correctly?
I mean, I guess that's exactly
One-
actually my point, is
Yeah.
if the idea is to take riskier loans that the banks can't touch, and
Right.
your default rate is at or below kind of industry standards, are we going deep enough into the credit pool?
Yes, this is super. I really appreciate you bringing up this conversation. So when I was brought on board, there'd been nobody in the loan department for a year and a half. And they all retired, basically. And the reason they retired is because there wasn't any business, okay? They've been to the USDA and they said, hey, you know, we have this, USDA has a higher, bigger reach through the rural process, and basically the 97 quarter. He said, let's reach out to Southern Oregon and the coast, because we have some contacts there. We can pick up loans and keep this loan program going. But it really slowed down dramatically during that time. So when I was hired, it was kind of a temporary job. Thank you for keeping me this far.
Jury's out.
But the way they were able to bring somebody back in the program is because through the CARES Act funding, we received $2,255,000. 10% of that goes for admin costs, which is a lot to actually run a loan department. So there's basically $2 million to lend out there, but that's what was available to get the program going. We've gone through a timing sequence of getting this thing underwater to breaking even. And this year, you know, we're in the positive zone, the positive management zone. So part of that answer your question is, you want to have a program that's self-sustainable. And if we were taking higher risk with more potential capital default, there might not be a COIC loan program at all. So we're kind of morphing, I want to say, into some potentials that will offer opportunity for higher risk. But again, it has to be managed, because a $250,000 loan on our portfolio, one of those going south, that's a big hurt, okay, to the system. A couple of $25,000 loans, it's not as bad. And our loan committee, the way we have it set up, the risk we take for the smaller loans into our micro loans, it's greater risk parameters, okay? And the reason is we would sustain as a significant loss for that.
And you'll touch on how you price these loans later on in the presentation, I would assume? Okay.
Yeah. I make it up. Okay, next slide, please. Okay, marketing and outreach. We're all over. And I'm always looking for opportunities to talk to people. I spoke with Lapine Chamber last week. And I probably have a couple more on my list I need to make pitches at, but basically the majority of my job, not the majority, where it all starts with us is getting out into the land of visibility, where I want to be top of mind to people. So I'm networking, I'm involving other association partnerships. I work closely with all these people over here. Latino Community Association, we work with them to file a grant over in Madras to have some more penetration to the business community, especially for smaller loans. EDCO, which does traded sector, by the way, traded sector is managing companies that are selling products outside the state, usually bigger industries. But I work closely with all these people through the whole area, the chambers, referrals from the chambers, I'm networking with them. Professional organizations, Cultivate Bend, which is a consumer packaging group, Oregon Outdoor Alliance. I mean, I was kind of rubbing elbows with people because where this all begins, and I think this is part of being in the beautiful community that we're in, is that if they know you, spend time with them, they're gonna like you, and then they trust you. Know you, like you, trust you. So I play a sales role, okay, to get things moving, to get that conversation started. But these are all the ways that we participate, and there's probably more we could do. Speaking earlier that, you know, in the board here, you will come in contact with businesses and people you see in the community. Think of us, you know, you see something out there. I've had referrals from people. This has been great. Make that connection, see if we can move somebody forward, but that's a way the board can kind of help participate in this. But most of my business really comes from commercial relationship managers, the banks and credit unions. Really, we're bouncing things back and forth all the time. You know, I've got a meeting tomorrow, somebody wants to look at a property in Prineville, and the banks say, well, they're a newer business, maybe we can't do it, but maybe we can help them create some equity from their home that's there. And COIC look at it, we're trying to figure out ways that we can move that one forward. We do some advertising, I'm in Prineville and in Madras. Realistically, it's harder for me to have physical presence in those communities because of the distance, okay? But I do get out there, especially towards the, the spring and summertime, the winter, it's just kind of brutal most of the time. But we do some advertising with the chamber. I'm looking at the Cascade Business News, but the interesting thing is I look at these things we've done over the last couple of years. I really don't get traction from that kind of marketing. It really comes from people. It comes from knowing people, knowing you. I do get calls that come directly to us from our website. Past COIC adult education client or a parent thereof, or a business that we financed in the past, knew somebody else. So it's interesting, it comes from everywhere. But we're always trying to be top of mind. I'm always looking for ways to do it. I didn't put on here WorkSource and Oregon Vocational Rehab. They're also conduits to us. You know, unemployment people, there's a program they can have to help them be through self-employment. I worked with some of that before in the past. So there's this and more. Next. Okay, application process. Just want to cover this. There's a couple slides here, but I don't want to spend a whole lot of time on it. Basically, everything starts with a conversation. They find us, I find them through a referral and introduction. I'm going to talk to somebody about their project to see where they're going to fit, if they can fit within our guidelines, if they're going to meet the requirements. Sometimes it's down payment. I had a conversation a week ago, and the end of it, or in the middle of it was, I don't have any equity. I wanted a grant. I don't really want to borrow money. Well, we don't do that. We did it one time. We helped the counties. We moved $2 million one slot, $1 million something the other slot. So we work with those things in our department, but we're trying to qualify people that they'll make the, I guess, meet the parameters for any of those 3 programs that I have. That's really the key. Are they going to meet it there? So does it fit in the programs? If it doesn't, I'm going to send them, well, excuse me, if it does or doesn't matter. They're going to get a partner resource list. I'm going to show you that in a second, but we're guiding people sometimes through a lengthy process. Sometimes they come to me, Patrick, I need money next week. I can't help you in next week. Maybe this is going to take X time. We'll go over that in a second, but sometimes they're just in a hurry. I can't help you. And I have real kind of confidential, very transparent conversations with people. This is what you have to do. If you do this, it's going to take you some time. I'll work with you through that process. Some people are in my system for 6 months before they're actually ready. They sent me financials or updating this. It could take them 6 months and then they're ready to go. Okay, so it can be a lengthy process, or sometimes they're just not ready. So we're just sending them through the, doing warm handoffs to people that can help them. Again, I have to get denials from banks or something, and I send them a checklist. Kimberly? So this is a resource list I send out to, I gave it all, the bankers and credit unions. I give it to anybody I can. I'm going to send it all to you too. More stuff for me, lucky you. But basically, there's so many great resources in our community. Business Oregon has a great publication on if you're just starting a business. It's fantastic. I've got on there Deschutes Library. I love Deschutes Library. I'm not sure what Crook County and Jefferson has, but there's a database down at the library itself. You have to be physically present. That was phenomenal with helping with the business plan. You know, interviews with CEOs, financial people in industries. Speaking of which, so this right here, I got a couple of these books. This is what I use in underwriting alone, going through the process to see if somebody's meeting the metrics or where they stand in the community. So these books are published by the Risk Management Association. Basically, it's an aggregate of what all the bankers are saying for all the industries that are out there, for metrics of inventory as a percentage of your assets, what your debt service is, that's gonna be as far as ownership, net worth, equity, cash on hand, all sorts of financial things, and it's driven either by the size of the business in volume or in sales. And it becomes part of a tool that we use to see as a benchmark where that person falls in. And it's not, like I said, the way we work, it's not cut and dry, but it gives me an idea of like, is this business, are these projections real? Is this business run well and things like that? Because we scope out the businesses through the process. Back on this, the SBDC, love those people over there. We're doing handoffs. I'm referring people over them for either specific things, marketing, operations, finance, advising, setting up the business, and or the whole package. Central Oregon SCORE, which has meetings, and Opportunity Knox, which is basically more like a mentorship program. It's a little bit higher level typically, but that's available too. Next slide, please. So I sent out a pack to people moving forward. So let's say I've spoken with them. We've kind of determined what our next step's going to be. So they're going to get a checklist of things that they're going to be putting together for a loan. Basically, this is a list of things that are important. I want to say the business plan becomes very important in my world. New businesses, we really have to go over that. They don't have to be like 30 pages long. I send them templates, a couple, one from the library, one from the SBDC. If they're more sophisticated, I send them another one. But I want to make sure that they understand that there's a pathway to success, and they need to demonstrate that in writing, not just in their head. Because in their head, they're going to rock it. They're not going to be millionaires and, you know, vacation when they sell their businesses. I want to see it in paper. I want to see that you understand the strengths, weaknesses, opportunity, threats in your business, who your competition is, how you're pricing your product, what your margins are. Do you understand what it costs to make your product? Do you understand what it costs to move it out the door? How you're going to market it? Who's going to handle the operations? You don't have to know all these things, but they have to know that it's part of doing business. You have to understand there's resources out there to help them, or they can delegate and hire people to do these things. But the business plan becomes very important, and actually, so does the resume, which I mentioned earlier too. Next. You know, I'm gathering financials. So before we even hit an application final, I want to scope out, you know, show me your tax returns, show me the financials of the business, because this is the nitty gritty of spreadsheets we run. When I'm presenting a loan to the board, you're saying a, you know, 2-page summary, maybe 2 pages of what we've looked at, what the loan committee sees, 16, 17, 18 pages. Some numbers, lots of grilling, lots of formulas, lots of ratios, lots of explanations and things like that, very detailed. But the sooner I get those things from people complete, the sooner I can determine whether or not we can move forward. I gotta tell you, one of the hardest parts of my world is actually just getting paperwork from people. And my competition is not necessarily, I'm talking, like I said, the banks are not my competition. My competition is the easy button on the internet. And the easy button works like this. You go to the internet, fill out a real simple form, you pull your credit, and here's the money. Here, sign these forms. We're gonna take the money out of your swipe, you know, debit account, whatever, every day or every week. And if you read the fine print, it doesn't say it, but you're paying 30 or 40% interest rate. I'm trying to capture good clients before they go down that road. Sadly, when I give them paperwork, they're thinking that like maybe COIC as a non-traditional lender isn't going to ask for everything the bank does. I ask for everything the bank does. Okay. We just look at the things differently, but getting that paperwork from people, I gotta tell you, sometimes it's a grill. But it's also, what do you call that, self-selection in my world? If you can't go through the process and produce the things to make the decision, how serious are you about your business? And what's the chances your business is gonna fail? We're trying to create a pathway to success here for these people. We want to help them. We want to help our communities, et cetera.
So hey Patrick, I just want to do
Yeah.
a check-in on time.
Oh, sorry.
We've still got 2 more agenda items to go
Okay.
for.
So just put it real
7:15.
quick.
So, but yeah, we need you to kind of wrap up and make sure there's a chance for any.
Yeah, thank you very much. Okay, so we have 2 loan committees, sub 25,000. We had a board approved this a couple years ago, just to get money out the door faster, takes 3 to 4 weeks. Above 25,000, it's the loan committee, that's 4 bankers or lender related people, 3 from our economic development business world. And then those loans come to the board. I gotta tell you, it's an obstacle in my world, because they can take up to 60 days. Because of timing, how things flow through the process. I speak with the other economic development districts. How do you do that? Well, I got 7 people on our board. I've got 9. I have 4. What do you do with 4 people if it's a split? Oh, the executive director makes a decision. Okay, I understand that. But what happens to the authority loan committee? So a lot of the other places, as in more than a majority, the loan committee has full authority when the loans to approve the loan. And what happens is they're able to move it through the document funding stages and the board ratifies it. So I just want to talk about that for a second. Next. Okay, current rates. We have rate parameters with our EDA and our USDA funds. I can't go below 75% of prime or 4%, so everyone's lower. Maximums like legal allowed by the state. But here's the deal. In community economic development, we price our loans less than the banks and credit unions. We're trying to inspire people to not have rates as an obstacle. It becomes a non-competitive issue with the rates and credit, with the banks and credit unions, because they get the first look. They can't do the deal, it doesn't matter, to them, but we've always priced less. We don't have an application fee, there are closing fees that are standard in the loan process. Next slide. We're secure. I know the government's kind of going through some transition here, we're in pretty good shape. We're self-sufficient, we're doing great. I've seen increased activity from people. One of the things I'm seeing, this is not a good thing, I'm seeing a lot of people that that finance their business. That's a bad thing. And COIC doesn't want to just be a substitute for somebody else's debt, because eventually those things go away, people don't get paid. I see a lot of that, sadly. Rates are holding for now. I gotta tell you, the stock market bombed today, the interest rates are going down. I can't tell you, recession, expansion, stagflation, inflation, it's all over the board. But again, as SBA or bank rates would be at 10.5% or 11% when we're at 8.5%. And I tell people as we go into things, we're gonna be right in that range. So we're coming up with a 5-year EDA work plan. We do this every 5 years where we can kind of we can do this before it's due in October, but basically we can say, hey, this is how we'd like to run our program. The approval of the board, EDA says that works, that doesn't, we can move forward. Next slide. So a couple things real quick, I'll get out of here in a minute. We have an opportunity to defederalize our EDA fund. So there's, again, I think it's like $1.5 million in there, or whatever we have. And defederalization means this. One, no more reporting, but we get to do what we want as our board and how we want to invest our money. We could become an equity investor in something. We could lend on a nonprofit. I mean, there's all sorts of opportunities available out there for that one. The only restriction that they're going to keep is I still have to follow Davis-Bacon prevailing wage. Crazy, but it's their rule. The USDA fund, I have not lent on that fund since I've been here. I've been able to utilize the EBA because of the restrictions of basically the equity investment. But we have an opportunity we're discussing about, does it make sense for paying off that loan? We have the capability to do it. If we pay off that loan, I've spoken with USDA, it's ours. We can direct it as we want without restrictions from their standpoint. We structure interest rates. We're talking about trying to figure out on microloans to create lower interest rates because there's still barriers to business to get people in the system in an easier way, but still make sense of it. Formalizing the loan committee. John and I have spoken about that. I think I spoke with somebody else about that. Most places, it's we're all over the board across the state. No terms on loan committee, 2 years, 4 years. Oh, 10-year maximum. Oh, you have to have 2 bankers? I have 4. You know, we're all over the board, but let's find something that makes sense. The idea of the loan committee from the banker standpoint, there's a lot of stability with the bankers that finally understand what we do. Got to bring them up to speed. They're the number crunchers. I gotta tell you, the loan committee can be really brutal sometimes, but you know, again, when we move things forward, we move them forward. I want to focus more on rural communities. We're really trying to get out there with micro loans. We're investing in the community wherever we can on that one. And my big thing, I'm trying to think ahead here, but again, where things going and we don't want to get caught where people need money and it's going to take us a month to get it out the door. So we're trying to figure out a way to make access easier, especially in emergency situations like COVID. Speaking of which, Commissioner DeBonne answered the question. COVID is, I think we had like 11 loans on our books. We've had 3 loans go south. 2 are looking at potential collections. One of them was just a write-off, immediate. And those loans were set up in a very interesting time before I got the COIC. They were no payments for 6 months. They were 5-year loans, then interest only for 6 months. Let's make it easy for people to bring them back up to speed. And actually, the loans were written with a 5-year, well, that would have left you 4 years to pay it off. I've got probably half a dozen people that just paid off the loan as they went. Other people are making their payments at 2.5%. Lucky them. That's the best rate in the universe. But yeah, that's how that works.
So it's all over though. That's good to understand.
Yeah.
Lost some are paying off slowly, others have paid off.
Yeah, and one thing, so COIC just makes me think real briefly here. So new businesses, especially we look at, we're really, I want to say easy or very flexible. I use the term flexible. We'll look at interest only options for seasons. We got a loan we did a couple years ago. It's gonna be a struggle for the next 3 years. Let's go interest only in the winter time. There's no business in the winter time.
Mhm.
You know, so we're always trying to figure out a way to make it work for everybody.
Let's see if there's any questions. It sounds, Tammy, you have one.
Yeah, I just had an observation and a recommendation to the board would be that, given that Patrick, he's mentioned about the history, about the fact that we weren't having any loans, and then we had COVID, and then we've really evolved. And I wonder if it would make sense for us to put together a small committee to look at some of the loan program in general alongside Patrick and have an opportunity to talk about some of these nuanced things. So that's always at your prerogative. It doesn't have to be a formalized committee, but I certainly would love to have the investment of other thoughts and a chance to chat about that. So I don't know, show of hands or, you know, we can short straw it, but if there's an opportunity for folks that want to get involved and learn more, and then also help to guide it, we're always open to that.
Is there interest? I think John could start an interest in it.
I would, yeah, I do too.
Okay, great.
Okay, Chris, anybody else? Okay, okay, 3 of you would be great. I'll let you guys figure out with Tammy and Patrick, kind of a time frame to report back.
So maybe we could have lunch or just,
Yeah.
you know, a chance to come together, ask other questions and just be able to dive a little deeper. And then if there are any changes or you know, recommendations, we can
It'd
just
be
bring it back
interesting
to
to
the
hear
board.
about, you know, what might a strategy and action plan look like around the federalization.
Absolutely, yes.
Did anybody have any other questions that hadn't been answered? Okay,
That was a lot of stuff. Thank you for your time.
thank you, Patrick. It's good to get the overview.
Too bad you're not passionate.
Yeah.
Yeah, would it?
Welcome, Scott. So our next agenda item is going to be talking about the trade sector, target sector economics, and I think this is where we're going to get the city and overview of the city's
Yep,
trade.
so I'll give a quick, sort of overview.
That's
Scott
in the
Haycock.
Yeah.
Yeah, yeah.
So just so you guys understand, I submitted the wrong cover memo to Kimberly, and it was just a little confusing about these 2 items that are back to back. So the first item is from the city of Bend, from Damian Cernick here. So we're going actually to hit the other, the one that was up. This is not an action item, it was an information item for the board. And we decided to put it here because it's not the same thing, but it relates to the action item that is the next item that I'll be presenting on, which is our regional economic opportunity analysis. So just to give you a quick, if folks were confused about the packet or what we're doing, that's what we're doing.
Excellent.
Okay.
Thank you.
All right.
Okay.
Welcome, Damien.
And, am I driving or are you driving the presentation?
It's up to you, what would you prefer?
Oh, since you already got it up, I'll let you go ahead. Good evening, everybody, members of the board. My name is Damien Cernick. I'm a senior planner with the City of Bend's Growth Management Division. And I originally asked Scott to put this item on your agenda as a progress report of something we're working on about a month. And so now it's gonna be more of a presentation about what we did. This is some data that we're gonna be using for both land use planning, but also for economic development. I wanted to share it with COIC. So you have it and you're aware of it, and can use it as we coordinate on our respective economic development efforts. A few months ago, we started working, City of Bend started working with a team at Eco Northwest to look at our target economic sectors, to update something that's about 20 years old. And identify those sectors for a couple of reasons. One, support our economic development efforts in terms of developing a strategy for the City of Bend. But also there was some land use planning involved in terms of updating a product called our Economic Opportunities Analysis. And I'm going to use the acronym EOA because that's simply easier. But this is a document that we do in Oregon to look at our land supply for employment. And I'll touch on that in a minute. For commercial, industrial, mixed use, schools and public facilities. So we asked Eco Northwest to do some research on looking at economic trends related to different sectors. Give us some recommendations on what those sectors should be, and then kind of set us up so we begin that next work on developing an economic development strategy for the City of Bend. Next slide, please. I'm going to shift gears to talk about the land use planning portion of it for just a moment before getting into some of the data. This is the City of Bend's comprehensive plan map. Everything you see in either red, purple, light blue, pink, or dark blue are areas that we've identified for employment. So these are for businesses, manufacturing, schools, mixed use. There's roughly, I think, 4,600 acres of land identified on the map for those purposes. We did our last big update of our plan in 2016 with our urban growth boundary amendment. We adopted a new EOA along with an amendment to EGB to add land for not just housing, but also for employment and public facilities. That's something I'll touch on later in my presentation that we're going to be getting to work on later this year. So for the rest of my presentation, I'm going to be going kind of back and forth between data that will be more relevant to economic development, but also land use planning. Next slide, please. So when Eco Northwest, and the team consisted of Beth Goodman and Natalie Walker, did this work on kind of doing some research on our target sectors. They focused on a number of key variables. One was to look at our largest sectors that were in Bend. They used data from a source called the quarterly census of employment and wages for the Oregon Employment Department. We asked them to go back to roughly 2007, so right around the time of the recession, up to 2022, which is when the most recent data was available. So what you'll see in some of these graphics is like a 15-year look back. In some areas, it's a little bit shorter to look back based on the data that was available. We also look at the fastest growing during that period. So during this period, employment growth is about 2% per year in Bend. So we asked them to look at those sectors, identify those that were doing better than that. They also looked at what they called the more competitive industries, meaning when they started looking at the data in terms of how different sectors were growing, there were some where they could contribute that employment growth to the overall economy. And then they looked at how much that growth could be attributed to that sector nationally. And then what they saw was those were some areas where they saw greater job growth that they then attributed to something about Bend giving these industries a better competitive advantage. So this is something that's not a going to answer the why question, but it gives us some idea about what to look at when we do our future land planning and our economic development planning. They looked at those industries as well that were more concentrated in Bend, where when you look at something like healthcare or professional business services, a greater proportion of our jobs are in those sectors than when you compare that to those sectors nationally. So they did quite a bit of data analysis, but they also did quite a bit of interviewing. They interviewed Scott, the COIC, Chamber, Business Oregon, Ocean Cascades, EDCO, to not just ground truth the data and say like, what do you think, but also kind of get some input from them about what are you hearing or what are you seeing that's not gonna, come up in the official statistics. Next slide, please. So this is the slide that will show you the fastest growing sectors in Bend during this period. Those sectors that you see with a light green bar, they grew above average during this 15-year period. Those that have a dark green bar, they still grew, but they grew below the Bend average during this time period. And you're gonna see some repetition on some of these slides with things like healthcare, professional business services, but also leisure and hospitality. One thing I want to mention while I'm thinking about it, you have in your packet the executive summary, and I also sent on the final report in the slide presentation. When you look at some of these graphics, you're going to see things described differently. What I'll do is I'll refer you to that graphic in the report because it's extensively footnoted to describe each sector and how it was described. All the data was arranged by what's called the North American Industrial Classification System. So in some of the graphics, you'll see descriptions of industries or sectors by like a 2-digit description. Some are more detailed using 3 digits. So it's wanted to make you aware as you look at these, you'll see some differences in how things may be described. Next slide, please. So these industries that were the top 10 most highly competitive, meaning when Echo Northwest was looking at the data in terms of how the economy was growing in Bend, comparing it to how it grew nationally, and how each of these sectors did nationally, they were able to identify these sectors that did a little bit better. So areas like professional business services, for example. So again, this tells us that they did pretty well during this look back period. But it also gives us some data to look at and figure out, okay, when we start doing our economic development strategy, we start looking at more of a land use planning update, we can do a deeper dive to look at the data, do some interviewing and talk to people to find out what was going on in Bend that a lot of these businesses are supported them to do maybe better than the industry average. Next slide, please. And so here I wanted to summarize some of the key points that we got from the stakeholder interviews. Again, we had our team interview the Chamber, Ocean Cascades Innovation District, COIC, EDCO. They also interviewed folks in the Employment Department in Business Oregon. And in addition to the interviewing, I actually looked at some of the documentation that these agencies produced, like Business Oregon just updated their agency strategic plan last year. And I think COIC also adopted get the acronym right, Comprehensive Economic Development Strategy.
Wow.
Did I get it right?
Yes.
Okay, good.
Woo, gold star.
To really see like, are we on the same page here? Do we have enough, again, looking at the right sectors in Bend? So what they found is that kind of the bioscience industry is kind of growing in Bend, it's emerging. Manufacturing is still going on in Bend, but it tends to be at a smaller scale and it's more specialized. They also found that tourism is still doing well as an economic driver, but they did identify some challenges, especially with outdoor recreation, with the things we're experiencing in summer now, with some of the warmer days, some of the smokier days, and flagging that as something to be aware of in terms of how we might support those industries.
Daniel, good question on the biotech. There's some of the examples would be like Grace, Lonza, Saran.
Saran Bioscience.
Some of those. Okay.
Yeah, I think when I was looking at Saran's website, I was trying to find a way to describe it simply. They will do research for clients and actually look at giving them data on, for this drug, you should have a capsule of this size and this, depth or.
And they'll do the prototype.
Yeah, they'll do the prototype. Yeah, thank you.
You skipped over the part where Redmond is more affordable and. Just
I was thinking about that, yeah, guys, trying to find a job in biotech. couldn't-
put that out there, yeah.
Yes.
And they call it
Industrial
Pine
The
Belt.
larger scale,
Other cities.
shifting to Redmond, business friendly.
Housing development coming in Culver as well, so, yeah.
Thank you for pointing that out.
Don't worry, I got it.
Not that he's never heard
Trying to
of.
grow jobs in Bend. So this is our slide that shows our proposed target sectors by our 4 categories: recreation and tourism, health systems, building for growth, and then technology and innovation. And what you're gonna see are a combination of sectors that are locally serving our growing population here in Bend, in Central Oregon, but also those that are more export oriented in terms of exporting products to areas outside of Bend. And this is also included in your packet along with the report. Next slide, please. So I want to spend just a couple of minutes talking about next steps. We shared this information with the city council last night and kind of kicked off our economic development strategic plan process. It's going to be led by Cyrus Modi, who's our business advocate, and Jonathan Taylor, who's our urban renewal project manager. They're leading the team to develop a strategic plan for the city to get done by the end of the year. And then toward the end of the year, we're also going to be starting on our growth plan update, where we're going to be dealing with not just land for employment, but for housing, a variety of types. Transportation is going to be a big part of it. There's a city of Bend size is going to be having to address the climate-friendly and equitable communities rules, but also infrastructure, so water, wastewater collection, and stormwater. And I kept it short to see if I could answer any questions.
Question, back on that slide. You talk about land needs and how to grow. So I don't know if it was in this one or what Scott's gonna present, but we've seen a kind of largest per capita in terms of health planners, people working from home. So is that taking into account that when you say land needs and how to grow?
Yes. Yeah, but I think.
Because it's quite a high percentage over the last 4 or 5 years it's grown.
If you look at the report from Eco Northwest, one of the things we asked them to do is look at our portion of remote workers. And I think it was about 28% in 2022. So that's something that would affect land needs based on the industry, depending on what they're working on. And so that'll be something we need to consider as part of our work in terms of looking, 20 years out and looking at our land needs, not just for housing, but for different sectors of our economy.
So that's being built into the scope.
Yeah, I think part of the challenge with the data too, is not clear how many of those people, you might say I'm a remote worker, but you work remotely 1 day a week.
Yeah.
So what that means in terms of land needs and how it impacts transportation, the data is not that granular to tease out that difference. In my organization, we have people who work 1 or 2 days remotely, but they're.
Well, no, I'm talking about people that are fixed remote workers that are.
Yeah,
hired by
right, but the
corporate-
data doesn't, at this point, doesn't distinguish.
Well, eventually, do you think it will distinguish?
I don't know.
Because of
I
the
don't know
growth
the
and
answer to
what
that.
we're
It's
looking in terms of.
How the data is collected.
But do you think remote is increasing or is
Yeah.
it starting to decrease? I mean, I know in Cook County, we do hybrid, but we kind of have started to maybe discourage hybrid. So is it really
Well, I think you
increasing the
have-
way it did in
I think it's
COVID?
apples and oranges, though.
Yeah.
It's because you're looking at what you're talking about at the environmental center and other businesses that are based here that set up hybrid programs. What I'm talking about, what we're seeing and what I'm reading about, I'm seeing an increase in is actual people that are moving here, but are moving here, working for another company outside of the state of
Yes.
Oregon or outside of Central Oregon that are setting up their business within their own home office.
Have the
residential
residential requirements.
Exactly.
Yeah.
Yeah, so playing that into the land needs and how to grow.
I mean, I think it's gonna get talked about a lot more during the process, but.
Yeah, that's something that we'll need to, we're working on our RFP for consultant services right now. We'll be putting in the scope so that the consultant understands this is not going to be a similar project, what they would have done in Bend before or other communities where you just assume that everybody who's going to work is going from their home to a location in a commercial or industrial or an employment zone. But there's going to be a proportion of those folks that are working out of their home and their business may be based in Bend, it could be based in Oregon, or they may be an employee for the company that's out of state.
Yeah, yeah.
I just see like my daughter's on the East Coast, whereas they were working remote, now they're putting back into the city.
We've got about
I just see that
140
kind of,
employees.
My
they're
wife
dragging
is
it back.
remote, but she works for a business or a nonprofit based in Burns.
Yeah, but she's here. I get that, but I see now kind of that it's like they're dragging them. I'm just wondering if it's increasing or decreasing.
Yeah,
That's
it's a
what
good
I'm
question.
saying.
So as you mine through the data, we would love to hear more.
So I appreciate
My wife
it.
works for a
And,
small tire company here locally,
Uh-huh.
and she's mostly, remote, and
Is she?
they do not plan to change.
Yes.
I can see like medical, I can see a lot of it stays remote. then I also see that some companies are are pushing back on it.
Yeah, I was just curious because because I think it does align with, where when you're looking at land use, right?
Well,
So,
yeah,
go
during,
ahead.
during COVID, you saw a lot of businesses tell people to stay home. People learned how to work from home. The infrastructure issue then was bandwidth. And towns like ours struggled to figure out how to increase bandwidth to deal with attracting individuals who wanted to come and work in their basement.
Yeah.
But again, as Commissioner Hermer mentioned on the news, more and more large companies are adopting policies of bringing those people back into a building and so I kind of curious too, is the trend really sort of moving back? It won't go 100%.
No, but I
because
think
like-
I think it's important to
there's a
look at.
balance
Yeah.
there.
I think it's important to look at it here.
But things like bandwidth was, I mean, that was a huge thing back then. We just didn't have, they wanted redundancy, they wanted speed, they wanted.
Well, I think that's a good point. So in terms of where you hear from the city next, if you've not already heard from Cyrus and Jonathan, you will, because they will be reaching out as one of our economic development partners on our economic development plan. And I'm not sure that, I think Mike over the Scott finished the last agenda item, but I'm gonna be hanging around here.
I mean, I just want to say thank you so much for making time to be
Yeah,
here and
yeah.
the city of Bend has you on their team.
And we can also drive to TV. So.
We've always got space for one more, man.
Later, Tony. Have a great day, everybody.
See you, Tony.
I got a rodeo to go.
Watch those.
I do too. I have a rodeo. Oh, it's separate.
Yeah.
I got my tickets.
Here you go. You in there.
Yeah, 2.5 minutes.
Yeah, but I want to listen to Scott.
All right, go Scott, go.
Okay, what Damien said, just regional, done,
All right.
just kidding. A lot of overlap, there's a lot of overlap. Can you go to presentation? There we go. Okay, next slide. So I'm gonna speak to the regional economic opportunity analysis that's very similar, but has a different purpose. That we just, actually, it should say 25 update, because it's 2025, FYI. We just got it completed, it does need to be adopted by the board to be fully completed and blessed. And to give you some context, I need to talk about our regional large lot industrial program, because that's the whole point of this thing. And then what's next, and then we'll go to the action item. So we've actually, COIC has had a role with the regional large lot industrial program since around 2012, 2013. So it's been something we've been doing for quite a while. And it is a program that we administer that allows this region and no other part of the state to create an inventory of large contiguous properties for large industrial development. Go to the next slide. So we're the only part of the state that can do this. Really, there's no way to do this work without this program because it's very difficult for any individual city through their comp plan process to identify the need at the scale we're talking about. So, which means you had to broaden out to do a regional scale analysis instead. And that is actually how this market works as well. So EDCO, Business Oregon, individual communities themselves, but really more EDCO and Business Oregon, they market us as a region. They don't market Bend, they don't market or just Bend or just Redmond or just Prineville, they market the region. And when industrial site selectors are looking at an area, they want to look at multiple sites. So they want to see an inventory, they want to see what their options are. So that is all why we're involved and why we're doing this at a regional scale. To date, we've only used the program to add 3 sites to our inventory. The South Redmond tract, which is still in the inventory because it has not been developed yet. It will come out of the inventory at development. There was a City of Madras site that was developed by Daimler, and so that's no longer in the inventory. And then City of Madras has another site that's in the inventory right now, but not yet developed. I don't, I'm not part of the, why are they bringing in, who's the industry, all that kind of stuff. So I don't know what the idea is for that site, but, anyway, next slide, please.
Scott, are you defining development as shovel-ready infrastructure, or what's the trigger?
It's basically that like permits have been filed by to build the building or whatever it is.
Okay.
So not shovel ready, actually about to be developed.
Okay. With the stakes.
Yep. Yep.
So if they're testing this.
Okay, so going back, this is going way back, not only Business Oregon, but the governor's office as well is identifying the need to do this in Oregon. And EDCO was saying the same thing, we need to do this for Central Oregon. For basically land use reasons, land use watchdog type group reasons. I think there were efforts to do this over on the west side as well, those just weren't gonna move forward. They were willing to let Central Oregon go, if you will. So we got a grant, we weren't really super involved initially, but then there was a realization there needed to be a regional entity that would kind of administer and coordinate the program. We got a grant to build this regional economic opportunity analysis, which is usually done at a city scale. Next slide. And that analysis identified the need or the opportunity or the desire for 6 50-acre or more large lots to be put in the inventory. It identified what our target industry should be for this: data centers, warehouse and distribution, et cetera. And then a distribution of different kinds of sites. And the idea also is that this shouldn't all be in one community. The one thing I'll note is the one 200+ acre site was meant to be either in South Redmond or North Bend, just in terms of proximity to the labor force. And then we had the Oregon administrative rules were adopted in 2013, set the guidelines. Next slide. So we produced it, the 3 counties adopted it, individual cities did as well. We executed an IGA with all those participating cities. Basically said, we're gonna follow the OARs, we're gonna do this program together. And then since that time, we've only had 3 applications. We've approved all 3 because they met the standards. Next slide. Okay, so that expired. We were given about a 10-year window for this program, and then we would need to revisit. So we convened our partners to 2023, said, do we want to keep this program going or not? Everyone said yes. And so we actually got a grant from Business Oregon again to update the REOA. We put together a steering committee and we hired Johnson Economics LLC. If you have detailed questions about the inventory, or excuse me, the REOA, I'll write them down. I might have to get Jerry Johnson to get me the answer because I did not do this report. And the staffer who was going to do this presentation is now working for the city of LaPointe. So I'll do my best. Next slide, please. So the methodology was to look at national, state, and local economic trends and conditions, similar. Also to do the same work that Damien spoke to, what is our location quotient for different kinds of industries? Now, this is a narrower subset of industries. This is for an industrial land program. This is not for, other kinds of economic sectors. So, but still, usually we refer to that as location quotient, which is essentially we are performing better than you would expect, better than the average for, say, the state or the nation in these certain industries. So that implies we have a comparative advantage. And then what do those target industries or target sectors need in terms of employees and land? And this is very much a land need because this is industrial production. This isn't a work at home kind of scenario. Design folks, maybe, et cetera, could be at home, but not the actual production. And then it made recommendations on what our site inventory should be, which is, I believe, the next slide. Okay, yeah, so the current REOA, the target industries that they identified were data centers, warehouse and distribution centers, computer and electronic manufacturing, software and media, bioscience and incubators. So some overlap with what Damien presented, but some new things as well. And the ones that are asterisked, those were also identified in the prior REOA. So the REOA actually looked at a 20-year time frame, but this program is for 10. Over 20 years, they said it looks like it's more like 19 sites would potentially be what you would want to have in an inventory. By the way, an inventory doesn't mean, just like you build a road, it's not full of cars all the time. You put a bus on the road, it's not always full of, every seat is full. Well, an inventory of sites, you don't necessarily expect every single one to get developed. You need to have options and sort of for them to mull through, if you will. So, but they basically said over the next 10 years, which is very convenient because that's what the Oregon administrative rules have for us, is 6 sites of the same distribution as the prior REOA. Next slide, please. So after this step of the process, it needs to be adopted by any city or county that wants to participate. If say Prineville wants to participate, well then Kirk County needs to adopt it as well, because it's both the city and county, because this is about bringing land into the UGB. Then we'll update the IGA, and then we'll continue to do what we do, which is essentially take applications, we go through a checklist. If they are accepted, or excuse me, if the application meets the standards, it's pretty black and white. It's not really a lot of gray area in here. Then staff will recommend it to the board that it be approved. And that's what we've done 3 times so far. Next slide. We coordinate it. We take care of all the things like the IGAs. We evaluate the application. Those are the characteristics I was talking about. We go to that last one there, we go to EDCO and Business Oregon to say, hey, is this site really make sense? Because we don't know. It's not our job to assess this stuff. And so we have to have a letter from them, but it also has to be a service with infrastructure. The property owner has to be willing to put it into this program because there are limitations. You can't subdivide the property for 10 years after it's brought into PGB, et cetera, et cetera. And I think there's one more slide. Okay, so tonight, the idea, if subject to questions and satisfactory responses, is that the board adopt this regional economic opportunity analysis. The full document is in your packet. I believe it's 60-something pages. I'm sure everyone read every word. If you have a question about page 12 in particular, let me know, because that's my favorite. But we can, yeah, yeah, it's the second line. It's great quote. No, but honestly, if you do have questions that your concerns, I can try my best to answer them tonight. Otherwise, I'll have to get back to you after I talk with the consultants.
So do we have any questions in the room about the process or the product that was produced? Concern?
So you said the new report says actually it'd be better to have 19 or 20 sites.
Yeah.
Statutes say 6. Did the report those identify what maybe a 19 proportion looked like?
No, it in terms of like that breakdown.
Like number of
50s and 100s.
Yeah.
It didn't. Yeah, it just it's kind of more of a menu.
So, are we ready to have a motion to approve this? That's suggested the motion up here.
I move to approve resolution 437 to adopt 2025 Central Oregon Regional Large Lot Industrial Regional Economic Opportunity Analysis. Thank you for that, Scott.
Gabe, second, okay, Councilor Solis. Any further discussion about this? That's okay. We were having a discussion. No.
Wait, I'm sorry, I wanted to ask a question about this.
Do you want to have, you can ask the question still. We're in
No, it
discussion.
was a county kind of question. Between counties. Sorry.
Site specific.
Right, specific. That is a very good.
So if I don't hear,
What position is?
We are in the same position. I got my answer. Thank you.
so no further discussion, all those in favor? Aye. Any opposed? Abstaining? Okay, that's unanimous.
Thank you.
Thank you, Scott.
Before you peel off though.
Oh, yeah.
Oh, yeah.
Oh, what are we gonna say?
So, yeah, so I wanted to take an opportunity. I know this will be awkward, Scott, but bear with us. This is Scott's last meeting with the board before he becomes our regional solutions coordinator for the state of Oregon. And I've had the pleasure of working with Scott, or at least tangentially, over the last 20 some years, and he has been with COIC. There was a short hiatus, but let's just call it 22 years that he has been with this organization. And he's been in a number of roles. He's worn a number of hats, and he has been able to bring forward and elevate a department that is looked at by others in the state as top-notch and excellent best practice. And Scott is also looked at by his peers in the economic development district world as the really North Star of what it is that you would do as an organization. And so I just wanted to say that on behalf of COIC, this is very bittersweet. Scott and I have had conversations over the last couple of years about when you've been with an organization for so long, you kind of want to spread your wings and try something else. And yet there's a sadness in that too, because you're leaving an organization that you've been with for so long. So I wanted to, like tonight, the regional economic opportunity analysis, that work would not have happened without the knowledge and the tenacity of someone like Scott, making sure that COIC was there and being able to push that forward. Most recently, the Deschutes Basin Water Collaborative, Scott raised his hand to say, yeah, let me wrangle our water partners together and see if we can find consensus when we all know that whiskey is for drinking and water is for fighting. And it was one where I just thought, okay, well, giddy up. Let's see how this goes. If you're missing, I know, just let me know what county you were last in. So, the
But he
regional.
didn't ever bring whiskey.
Yeah, see, and that's, yeah.
You don't know.
Yeah, so that's maybe he just didn't share. Yeah. maybe he didn't share. The Regional Housing Council that we've all started in a space to be able to elevate your elected voices around our region and to help the state of Oregon understand what the needs are in our region. Scott also was behind making sure that our COAC, our Central Oregon Area Commission on Transportation, did not go off the rails and sort of stay with our friends at ODOT relevant and facing forward. Natural resources is something that we have really elevated our ability to bring talent and support to our smaller communities, in particular around our community wildfire protection plans, being able to make sure that we are a resource for natural hazards and all of the things. He's also brought forward a lot. One of the things that I appreciate about Scott so much is, yes, Bend and Redmond and Deschutes are doing amazing things, but we also represent smaller communities that just want help with the visioning process. They want help with capacity building. They want help with technical assistance. And Scott is the person who has said, you bet we can do that. And he's often come to you at the detriment of hearing, here's Scott again, asking for board dues to be able to support our small communities in being able to have that technical assistance and add that capacity so that you can do the great things that you all do. And so I just wanted to say that it's been such a pleasure for me and a learning opportunity for me to work alongside someone who is as talented as Scott and who has taken the time to develop such a talented and professional team that is doing the work and able to carry forward the work in his absence. And so we will be celebrating you, Scott, at some point this month, and we will be asking the board members if you can attend as well. But I just didn't want it to go without being said how amazing you have been for this organization and for this region. We wouldn't have Core 3 without you. That'll be something, maybe there'll be a plaque. There's
Some bronze statue.
my name is next to a building, yeah. My name is on a building in ODOT. We can, yeah, there will be this, yes. If you can just hold that position for a second, we will take a photo. But I just want to say how excited I am for you in this new position and for our region. But how grateful we are for the work and the investment that you've made with COIC, but also how much you're going to be missed.
Thank you.
So I don't know if other board members wanted to say a few words, but just wanted to make sure that you know that.
Thank you.
Yep, you're appreciated.
I just want to say real quick, because I did have, I'm not going to take it personally that as soon as I got on, you left.
It was the last straw.
I know, yeah. But we were at Core 3 last month where we did drink whiskey.
Yeah.
And
We were in Salem.
yes,
Whiskey.
yes. One of the things that I look at as somebody who leads a team and manages a small business is how their staff looks to them to identify a leader. And I think in addition to the many great projects and skills and things that Scott brought forth, the thing that struck me when the 2 days that we spent knee deep in lobbyists was how his team looked to him and how much he clearly cared for them. And that, what I think more than anything else, impressed me. So thank you for being a good leader. Thank you for taking care of your people. And thank you for being the kind of person that your people will look up to and try to emulate.
Thank you.
So I'm just gonna pile on a little bit. I remember when Scott first came to town, I was working at what was then called the recycling team. And him and his partner at the time were kind of casting around for work and places to, getting to know the community. And I remember meeting, I think it's one of those restaurants that's been lots of different things over the years. Just being impressed by his passion and interest in the community. And I kind of had a very strong sense at the time that this guy, if he stays here, is going to make a big difference in our community. And I think, it's great to see that. I think you really have in the community, and it's kind of flabbergasting to look back and realize how long it's been. And I've seen you show up in a bunch of different ways. I believe also including being a DJ at KPOV,
Yep.
right?
Ooh.
I helped start Ben's community radio station that's now 88.9 KPOV High Desert Community Radio in Scott.
20 years.
Yeah, one of the DJs. So I just appreciate, your commitment really to the community and the region and working in both the urban and rural, because I think have a very unique place for that reason and all the different parts of Central Oregon. And I think you've made a big difference across the whole. So thank you for that.
Don't forget about us.
Yeah.
Well,
Yeah.
on
Make sure the
that,
governor pays attention.
Yes.
Are you
Yeah.
a new zombie?
yes.
Yeah. that's-
Well,
there you
good,
go.
well,
Yeah.
good.
Yeah.
Look out.
Yeah, yeah, I'll just say really briefly, as I said, when I submitted my notice to HR and Tammy that I was leaving, that. So much of, well, I've put a lot into this organization and the communities and everyone we serve. So I feel like there's part of me in it, but also there's so much of this organization and the communities we serve and all the efforts and all the hundreds/thousands now of partners and colleagues and all that are in me now. Yeah, it's a huge part of myself. And this is really, Tammy was there when I announced to my team and it was rough. It was really rough. So, because I really do care about them. You're right, John. And I just love the work and I'm very excited. Don't get this wrong. I am excited. It is time. It's a good opportunity. And I'll note on the Deschutes Basin Water Collaborative, on Core 3, on the SET Strategy Committee, and on the Regional Housing Council, this new position has a seat. So I will be around. A lot. It's gonna be a little awkward for a minute, like with the new hat, but that's gonna be the case. Plus, in that position, it serves all these communities that are around the table, plus Klamath and Lake counties. So you all have some new state phone number, but you all have on my email signature or anything, that's my personal phone. So you'll have me, feel free is what I'm trying to say. I'm expecting to get a lot of calls from communities and whatnot, and I'm really happy to continue to work with everybody, just a little differently. So thank you guys. I can't believe I'm standing here 22 years later, but here we go.
Yeah.
So thanks again.
Congratulations.
Yeah.
So last item on the agenda is just a quick roundtable for those who might have a thing or two to share about something going on in their community.
So City of Sisters is really grateful that the Mobile Employment Resource Van, MERV, and Matt Olson came out to visit. I was able to get most of our counselors there, our city manager and our EDCO representative, Eric Strobel, and introduced them to Matt Olson. We got a little preview of the van and all of the services. And then I was able to get our local business association connected with Matt because they're putting on coincidentally a job fair this month. So Matt's going to be there. He's got permission. He told me working overtime on a Saturday.
Just fine. We're here to serve.
Yeah, so we're really grateful for that. And we're hoping to do this on a trial basis for once a month. It's really important we get the word out at Sisters, but Sisters is grateful to have this resource to see how it goes and helps our community.
Good, and you asked that question and here we are. It didn't take that long, which is good,
not.
yay. The process
Yes.
worked.
Good, thank you.
Good.
Anybody else?
Did we have a land trade swap? What happened?
Yeah.
No, I
I drank some whiskey first.
There's like a movement for
trying to
Greater Cook County now.
to
What's
get
going on?
money for Crook County and any, so I just was.
That's not a deep pocket.
Yes, Tim last night negotiated $100 more than he was allocated, so I'm trying to, make up. for it.
Yes, good.
I know, I let the
Felt
guys
sorry
go-
for him.
I let the guys go out and they spend more money and now I've got to make up. for it.
But
Okay,
if we
well-
spent somebody else's money, it was okay.
Oh, I don't know.
If everyone can keep their pop cans, please.
Yeah,
Send it to
I gotta go. for that.
All right, well,
Be on my performance.
nothing else, we're adjourned.
Huh?
Great.
Thank you.
Thank
Yes,
you.
it does.
Also, how early?